Hey everybody, it's Friday. Everybody yesterday was saying, where's the Bitcoin conference recap? Day one. That was yesterday. Today, day one happened, and it's not even over. But I wanted to get this out because I know a lot of our Europeans that like to catch up on what's going on before bed. So thank you all for coming. This one has been really interesting. A bit of a slow start. I've been at this since 6 a.m. trying to capture all of the goings on, and I created a condensed summary. But tomorrow, day two recap, will include a couple of bangers, including Snowden, who is speaking. I think he just spoke, but I'll capture all that too as well. But this one was huge. Let's jump into the agenda. Thank you as well, TND Tesla and Sean Donnelly, for coming. And again, this is rough and ready, and it's lengthy. There's 60 nuggets here, but it's so important if you are in Bitcoin because, you know, you always learn new stuff about Bitcoin. It's fascinating. So let's go. John's about math, money, and freedom. None of this is financial advice. It's funny. Wait till you see the Saylor stuff coming up later. But the quick agenda so far is Bitcoin dominance, Bitcoin on balance sheets, like the treasury strategy, Bitcoin, how they make countries better, Bitcoin nation state game theory, Blackrock orange pilling, how Larry Fink got turned around, Bitcoin for banks, Russell Brand at Bitcoin conference, the Saylor show. I will spend a lot of time on the Saylor show because it's phenomenal. Phenomenal. All the stuff that I've been talking about for years, the impact of stock to flow is incredible. And he talks about how everything melts away, except for one thing. And we'll get to his price targets too, which are very heavily sandbagged, but also interesting. But I took his price targets and I actually modeled them out for you so you can help build your own plan, where whether your goal is to retire in 28 or 2032 or 2036, I've done the work for you as well. What else? $1 million Bitcoin chatter all over the place and sooner than you think. But let's get into it. Whoops, wrong button. First of all, let's look at dominance. Shout out to Marty Party, friend of the channel. You can see during the conference, dominance for everything has fallen. Ethereum, Binance, Sui, etc. But two things are up. Bitcoin dominance and a token that will remain nameless. Bitcoin is strong, and we're back up close to that 68K level. And nice to be back at that nice round number, not too far from the all-time high. Now, first session is Bitcoin and the balance sheet. As you know, I'm a big believer in Bitcoin and the balance sheet. That's why my biggest position is MicroStrategy, because it works. And that trade has been by far, the biggest trade of my life. But I want to get into this crew here. These four gentlemen: Andrew Kang from MicroStrategy, Eric Semler from Semler Scientific, Simon Gerovich from Metaplanet in Japan, and Dylan LeClair, Bitcoin Magazine, who also is an advisory director to Metaplanet. And I'm going to summarize this real quick. This gets a bit meaty, but literally, as I said years ago, I know guys who are plumbers in San Francisco, and I orange pill them and got them to put Bitcoin on their balance sheet. And now their plumbing balance sheet is looking pretty robust. Let's get into why anybody would want to put Bitcoin on their balance sheet. And you don't have to be $1 billion multinational corporation. You can be, a 3-man plumbing shop. So let's get into it. First of all, it's a hedge against inflation and currency devaluation, which impacts everybody. Bitcoin is that hedge that we've spoken about for a long time. Also, as we've seen with MicroStrategy, it enhances shareholder value in a big way. When I first started investing in MicroStrategy, the market cap was about between 1.1 and 1.2 billion. Now it's 35 billion in less than 4 years. And that is huge value creation. Also, it helps liquidity and trading volume on an asset. Remember, think of it like an asset being like a flower. The more bees it has, the higher it goes. The kiss of death for any asset is not having volume, not having liquidity. Remember that. Also, positive market perception. Companies adding Bitcoin see increased interest and enthusiasm from both retail and institutional investors. We saw that in a big way when it came to people wanting exposure to Bitcoin before the ETFs. And then everybody said, oh, MicroStrategy is going to die after the ETFs. There'll be no purpose for it anymore. Not the case. And I didn't sell. Also, low cost of capital raising. I don't need to talk about this. It's like Michael Saylor borrowing for 0% for 5 or 7 years and buying Bitcoin with the money. I mean, what a beautiful trade. Fantastic. That's the low cost of raising. Also, flexible financial tools. You can do also cool things. A Bitcoin strategy enables the use of convertible bonds, at the market equity programs, enhanced capital structure flexibility. All of these things, of course, maximize shareholder value. Then you have alignment with modern financial strategies. For example, that includes technological advancements, building a business around Bitcoin, demonstrating forward thinking, innovative approaches to treasury management rather than having that big melting ice cube on your balance sheet. All these things really add a lot of value. Also, your treasury diversification. When Saylor first started, his idea was, well, I got a lot of cash. How do I stop it from melting? And he just put his toe in the water and never stopped ever since, which is kind of it's got a triple maxi, as he calls himself. We'll get to the triple maxi later as well. Increased public and media attention and potential for long-term appreciation. They are the top 10 reasons anybody with any type of business, even in your own personal retail account, stick some Bitcoin on your balance sheet. Next session is from these four fellows. It was all about Bitcoin and how it can make a country great. They were talking about the US, but it applies to any country. So you got Jimmy Song here in the hat on the left, Luke Rudkowski, Ben Askren, and forgive me, I forget the name of the moderator. Anyhow, let's talk about the 10 reasons how Bitcoin can make a country great, not just an individual or a balance sheet, but self-sovereignty and individual responsibility is a key American value. It's very important for individuals to take control of their finances without relying on anybody, not a government handout, not on any third party, not on an employer. And that is so important. And that's one of the reasons I make videos every day for you all. So you can build your path to financial freedom. And that ties into the second point, freedom and liberty. Bitcoin aligns with the core American values of freedom and liberty by offering a decentralized financial system that operates outside of government control. You'll notice that the behavior of people who are into Bitcoin is very much geared towards this. Leave me alone. Do not tell me what to do. That's part of the whole freedom and liberty stuff. So I hope that's clear. Next, anti-inflation hedge. Bitcoin serves as a hedge against inflation. I call it the life raft so you don't drown in money printing. Some of the charts I'll show you later will absolutely terrify you. I even knew these charts, but when you see it point blank in front of your face, you get really scared as well. This one, point number 4, is so important. Disruption of rent-seeking behavior. This is behavior prevalent in traditional financial systems, and the panel criticized the financial industry focused on extracting value without adding real economic benefit, a practice that Bitcoin can mitigate by decentralizing financial transactions. Basically, fees, taxes, you name it, everything ripping you off. Promotion innovation. It really does encourage innovation and production rather than financial speculation. Also, it aligns with anti-tax and anti-war values. We know that it offers a way to conduct transactions and store value without funding government activities that individuals may oppose, such as excessive taxation and military interventions. Ta-da! And again, just a reminder, these are the points that I took away from the conversation from these individuals. Not my point of view, although many of them tend to be very aligned as well. I like peace, by the way. Grassroots economic empowerment. It empowers local communities, providing an alternative to the banking industry, peer-to-peer transactions, nano-transactions, microtransactions, supporting local economies, poor nations, etc. Cathie Wood, a little later, talked about some of that too. And incentivizes ethical behavior. Bitcoin is transparent and immutable, and there's no way you can play funny games with it. Despite, in fact, another session we'll talk about it briefly, but how one politician says Bitcoin is for nefarious crimes. No, Bitcoin is the last thing you want to use if you're actually planning on doing some crimes. So that sounded weird. Also, potential for the Bitcoin standard. The panelists envision a future where America adopts the Bitcoin standard, enhancing economic stability and growth. And such a shift could revitalize American industry, reduce government debt, and restore fiscal responsibility. I will show you a slide later, a beautiful slide of how in the year 2045, the US government can go from having 35 trillion in debt to an actual surplus. Unbelievable. Just using the Bitcoin standard. It's just math. Who knows? Next, third big section that I found very interesting is nation-state game theory and international trade. I wasn't really familiar with any of these people, but anyway, I did listen to what they said. First of all, Bitcoin as a strategic asset is viewed similar to gold or oil reserves, energy, except for it is much more divisible, much more portable, much more flexible, and anybody can do anything with it, make a deal without going through the big global monetary system financial rails. It will also support geopolitical stability. It provides a hedge against political instability as the world becomes more fragmented, more competitive, but Bitcoin being neutral and independent from geopolitical alliances makes it attractive for countries seeking strategic autonomy, which I found really interesting. Economic resilience. Bitcoin can strengthen a country's economy by providing a hedge against inflation and excessive money printing. Just check out El Salvador and what they have done too. Also, a big piece here on first mover advantage. This is about game theory. Countries that adopt Bitcoin early gain that advantage. And this race will come. Similarly, the adopters of the internet can gain very large strategic advantages. By the way, we just had a third big pension in the US adopt Bitcoin. First one was Wisconsin. Second one yesterday, I reported New Jersey. Third one today, Michigan. I nearly forgot the name. Michigan adopted it too. So again, slowly, then suddenly. And we're in the slowly phase right now. And everybody's now talking about this first mover advantage of game theory. Also, competitive advantage with technology. Nations that embrace Bitcoin and blockchain can position themselves as leaders in the digital economy. And that attracts investment. Again, look at El Salvador. It attracts innovation. Again, El Salvador. Talent, El Salvador. And that boosts their global competitiveness. Regulatory flexibility. Countries that adopt flexible and supportive regulatory frameworks for Bitcoin will also attract businesses. Check out Dubai. Look what they have done lately. And then network power and influence. Dominance in the Bitcoin network can enhance a country's strategic influence. The ability to control the nodes in the global financial network, similar to how the US benefited from its dominance with the dollar hegemony. This can provide significant geopolitical power. And also, you notice how all this stuff is very political. Not by choice. It's just the nature of the world. And surveillance and choke point power too. Control over financial networks provides surveillance power, access to valuable intelligence, and choke point power, ability to exclude actors from the network. Check out Gary Gensler and Elizabeth Warren and their choke point 2.0 strategy. Anybody involved in anything related to Bitcoin were blocked out of the system. And this is not a conspiracy theory. This actually happened. And that's why this is important. What else? Alignment with libertarian values. Very important. Bitcoin supports liberalism by promoting individual sovereignty and peer-to-peer transactions. And this counters the trend towards digital authoritarianism, central bank digital currencies, digital IDs, all that stuff. And that has to not happen, hopefully. And economic and political incentives. What do they talk about there? Again, it'll shift perception. We're seeing perception shift. I can't remember exactly why I wrote that down, but perception is shifting all around the world. Every day another country says, okay, we're going to unban Bitcoin. Okay, we're going to allow Bitcoin trading. Okay, we're going to allow Bitcoin mining. Slowly, then suddenly it all happens. Okay, that was a big one. This is a short one. How Larry Fink got orange pilled. I do remember these two gentlemen here. This is Robert Mitchnick from Blackrock and James Seyffart from Bloomberg. James is on the left, Robert is on the right. and they had an interesting talk. But it was kind of, how did this guy do such an about-face in a short amount of time? It was always interesting, and I never heard the background story. But these are the 3 reasons I got from this conversation. The 3 big aha moments for Uncle Larry, or AKA the Finkster. First of all, he is curious and he's open-minded. And by the way, always be curious. Always be open-minded. Always ask the right questions. That's how you get ahead in life. If you don't ask questions, you'll be snowed in BS by the media and such. So shout out to Larry. He demonstrated huge curiosity and open-mindedness towards Bitcoin, despite being very anti and very skeptical. And he called it the index of money laundering, if I recall. And he dedicated time to study the asset and the technology. And this intellectual curiosity, which everybody should have to understand the nuances of Bitcoin, played a crucial role in the eventual endorsement. Point number 2, strategic and technological perspective. Again, he understands money. He understands financial history. He understands geopolitics. And combine this with tech, he says, I'll see. And I think Robbie pointed out that individuals with a strong grasp of financial systems and technology tend to grasp Bitcoin's value proposition more readily. If you don't understand tech or you don't understand money, you're not going to get Bitcoin. And Fink's vision for Bitcoin as a significant technological innovation contributed to his conversion. And third, probably the most important piece, and I kind of had an inkling about this, but I wasn't entirely sure, the not only client demand, but also institutional infrastructure. The increasing demand from Blackrock's clients and the development of institutional grade infrastructure for Bitcoin were pivotal factors. And this is what they want to do. So I always talk about everything going towards the blockchain. You know, the next exchange that's going to be built will be blockchain based. This is why Larry wants to be part of that next big exchange and also have a, foot in the game, as it were, to make sure he's a player in this new future. So that was interesting. Next, this is a little bit of history here, but this happened. Russell Brand is at the Bitcoin conference in the Rumble booth and Expo Hall. But Russell Brand has also been a big believer in Bitcoin for quite a long time. But there is a sad bit of history. 10 years ago, fun fact, this guy, Max Keiser, gifted Russell Brand 1,000 Bitcoin after an interview. And Max Keiser gave many people $1,000. Many, many people. I know of at least 3 or 4. Just having 1,000 Bitcoin means Russell Brand flushed $68 million down the toilet. That must hurt. It's like the guy in the UK who threw his hard drive in a landfill or something like that. And this is why I say there'll never be more than 14 or 15 million Bitcoin. You add up all of these cases, especially in the early days when people say, oh, what the hell is this? And have you ever lost a thumb drive? Have you ever lost a key? Have you ever lost a cell phone? Okay. Think of all those things. Anyway, that's a shame. 68 million. Now, next is the future of banking with Bitcoin. I won't spend too much time on this, but this was kind of an interesting session from a couple of solid players. First of all, this is all about how banks need to embrace Bitcoin in order to survive the future. Traditional banks face significant technological constraints, and they have very outdated systems, and they are mandated by regulators like the Fed. But integrating Bitcoin, which operates on an advanced cloud-based platform, can modernize banking technology and improve efficiency. That was an interesting angle. Also, regulatory compliance challenges. The regulators do impose strict rules on banks, but this, hopefully, with a cleaner compliance and regulations, this can all be solved as we go forward, leading to a more progressive banking environment. Private wealth, banking opportunities are also there, especially for custody. We'll talk a little bit more about that later. Increased efficiency and risk management is also a big part of the game. Also, the important point, a bank has to run 24/7, 365. This happens with crypto and Bitcoin. Also, custody services. Banks can leverage their legal and operational frameworks to offer custody services with Bitcoin. They all should get into this game because that can be quite lucrative. And evolution of regulations and global competitiveness is key for these banks to survive, because technically, if you are on the Bitcoin standard, you actually don't need a bank at all. Say bye-bye. A lot of people just use them just to collect their payroll and stuff, and then they convert it to crypto right away. So let's talk about Caitlin Long, who actually is the lady front left on the panel with the orange sneakers. By the way, I got orange shorts on today. I should step back and show you. But anyway, that's enough orange for today. But this is Caitlin Long with a little orange golden coin there. She's this thing she overheard. She's tweeting up a storm, but I thought these were interesting. How I became a single issue voter. I'm only voting for people who don't want to put me in jail. That could have been a software developer, who knows what. And the other one here is regarding a fundraiser here, raised a shocking amount of money. I won't out how much, it's still growing. And the industry might become Trump's top donor industry. So we'll see. Anyway, that's from Caitlin Long. A little bit of what she's hearing on the street right now. Also, that guy is coming tomorrow to talk at 2 p.m., which is 11 o'clock my time. And I'll do a full report as well on everything that I said tomorrow. Now, this is from Dave Weisberger. This is how Senator Haggerty, there's a lot of senators there today as well, which is very good. So it shows you how politics is infiltrating Bitcoin. But on the main stage, he crushed Elizabeth Warren by pointing out how the distributed ledger technology allows law enforcement to catch the bad guys. Plus, how she uses inflated numbers and misleading statements to try and crush the industry. This is part of the whole choke point 2.0 thing with Gensler and Warren that people say didn't really exist. Hells yes, it did. It did. And they're being exposed right now. And hopefully they'll both be without jobs next year. Be wonderful. Get out of our faces. Now, this is also a very good point from the Mooch, Anthony Scaramucci. He talked about, I think that's Gary Cardone on the left. I hope I got this right. But he talked about how, it's very bad for left and right to be there for Bitcoin. Both parties, whether you're left, right, or in the middle, you should embrace Bitcoin. And the more the parties both embrace Bitcoin, or all three parties, or whatever many parties there are, the better it is for the Bitcoin space. And that's exactly the way I think as well. It should not be exclusive, and no one party should be allowed to dominate it. All should embrace. But if you wage a war against Bitcoin, you're not going to be a friend of some people. Anyway, now this was big. This is the crowd waiting for Michael Saylor. Super interesting. He's like the rock star of Bitcoin. And boy, there's a term called pitchman. Like if you want somebody to sell a duster or something on TV, this guy can sell Bitcoin. Like he made me want to literally, after watching him, go out and buy more. So let's dig into what Saylor had to say. First of all, I'll go through this fast. There's a lot of stuff, but again, no matter how many times you see it, you have to see it again and again. He talked about how 900 trillion market for assets in the world, which is growing very fast. Half of the assets are for one purpose, store of value, which is where Bitcoin sits in. And then he spoke about the physics of money. I loved this, and I've never heard this analogy before, and I knew it as some new material. But he spoke about Nikola Tesla, and he said, if you want to understand the universe, think in terms of energy, frequency, and vibration. And on the right, Saylor broke that down into three categories, how it ties back to money. So energy is money, capital, and wealth, and you want to preserve that energy. Frequency is duration and lifespan, and vibration is, trades, transfers, transformations. All of this is kind of noise, and that burns energy. That melts the ice cube, and that's a big part of this too. So you want to preserve your asset. You don't want it vibrating too much, and if you do want it vibrating, you want it to be very, very low levels of vibration. Sounds bizarre. Then he talks about this is the most important thing for everybody to sit here and listen to. This is the useful life of your money. So it's basically how to spend to avoid depreciation or decay. And L equals VM. L is like stock to flow, useful life. For example, real estate is 112 years. And the Argentine peso decayed in 2 years. So that's useful life. And V is the value of the asset, and M is the cost to maintain. So think of M like the vibrations and the frequency. You don't want a lot of that because that'll just eat away at your bag. It'll melt away your ice cube, and that's not good. But it gets a lot better. Well, I forgot to do a title on this one. I'm going to go through this fast. These are lots of really cool images. But the half-life or the useful life of a yacht is 6 years. That's basically how much it costs. The amount to maintain it every year. So if you have a boat, the cost to maintain it is 15% of the value. And sometimes, as a former multiple boat owner, yacht owner, sometimes it's a lot more than 15%. I had a boat that cost, well, we'll say round numbers, 100,000. It cost me a lot more than 100,000 a year to maintain. Trust me. But that was a racing boat, so crew, sales, very expensive. So 6 years, if you buy a boat, you lost it after 6 years. So 2 best days of boat ownership are the day you buy it and the day you sell it. Remember that. Then the US dollar, 14 years. As I stress, it's ironic he said 14 years because I talk about 14%. That is your hurdle rate. If you're not making 14% on your money, you're not treading water, you're sinking. 14 years, remember that, for your dollar. A house on Miami Beach, a $10 million home in Miami, costs $600,000 per year in tax, insurance, utilities, maintenance, and upkeep. Okay? You spend $10 million maintaining your $10 million home in 17 years. Therefore, the life is 17 years. Gone. Hedge fund, 25 years. He broke it down, 2% management fee, 20% upside. 25 years. And we're going to longer duration stuff as well. Gold, 62 years for the gold bugs out there. The stock to flow of 62 is the annual dilution of about 1.6% per year. And then you have lots of taxes and transportation, security and storage and other types of risks. Fake gold, it's probably a lot less than 62 years. So don't think gold is going to help you cut it. Then land. You think you buy a piece of land and you're going to be fine. There's no depreciation. But no, it's taxed at 1.1%, which means it disappears in 91 years. Land. What else eats your money? And this is cool. I love this layout here because it's not just what I call debasement, but there's taxes, all sorts of taxes. There's rent controls and there's culture and there's competition and discrimination and the energy and weather and war and flood and decay and accidents and tenants and everything eats at your money. So remember that. Now, then he talked about the solution. I love the way this was framed up. The solution to the world's economic dilemma is the transformation of our capital from financial and physical assets to digital assets. And Bitcoin is extropic, the inverse of entropic. And that is what I think I picked up from what Saylor said today. And my interpretation of this is he's conveying the fact that Bitcoin is a force of positive change, bringing structure and growth to the financial system, contrary to the concept of entropy, which implies constant decay, disorder, corruption. Think of Bitcoin as a cleansing agent that helps bring life to these wasting assets. Very important. Also, Bitcoin duration. And he had multiple ones. I just threw one up here. If you consider the cost of, say, 10 basis points, that'll last you 1,000 years. If the cost of custody is 10 basis points. If it is 1 basis point, it's 10,000 years, etc. I can't remember the exact details. And maybe if there's AI custody in the future, that'll last 100,000 years without any kind of shrinkage. That was very profound. But then he got into the business, the price projections, which I love too, because I love price projections. And I have not seen him do price projections before. And I watch all of his stuff. So this was his chart. I took a shot of it. And he assumed Bitcoin 2024 is 65K. At the current time, now live, Bitcoin is $68,100, everybody. I'll zoom out for that. We're back above 68K. Yay. But here, he had 3 different scenarios. Going out 20 years. So going out to 2045. Base price 65K. Percentage of assets. This model is super simple, and the best models are the simplest models. He believes in 2024, it is 0.1% of global assets. Bear case is for it to make 2% of global assets in 20 years. Base case, 7%, which is very achievable. And bull case, 22%. And if that is the case, the ARR, the bear, is 21%. There's very few assets you get 21% appreciation per year. 29% for the base, which would take the price to $13 million in 20 years. And 37% ARR, which take the price to $49 million. And it just shows you a small difference in ARR of just 8 percentage points. Nearly quintuples the actual value of the price. So I took this one step further. I'm going to break it out for you in a second. But I want to show you as well his representation of where this thing could go. Global wealth forecast in 2045. The total amount of assets in 2045 be 4,000 trillion instead of 900 trillion today. So it'll go up nearly 5x. And Bitcoin is that top left corner, 280 trillion of that 4,000 trillion. That's where things will go. Equities, 850 trillion. Real estate, 1.36 or 1,360 trillion. Bonds, 840 trillion. I don't think bonds will exist in 20 years. Who knows? Well, there'll be some flavor of them, but maybe there'll be Bitcoin-backed bonds. Who knows? So he then spoke about this. I love this. He talked about how people can be the normies, and the normie kind of return depending on exactly how you invest, how much you borrow to invest, etc. He mentioned the ARR based on exactly how aggressive you are getting in early and according to the different scenarios. But basically, if you put 10% of your assets into Bitcoin and you somehow get to a position where you generate or get to hold one Bitcoin by the year 2045, you will have $21 million in assets. If you get to 7.9, hey, Doc Intern, thank you, buddy, for coming. And thank you for that great document and discourse there yesterday. Bitcoin Maxi will have 7.9 Bitcoin. That bag will be worth $109 million in 20 years. Then you got your double Maxi. That's somebody who just borrows against their house and puts everything into Bitcoin. They get to a bag of 11.8 Bitcoin. This will take their wealth to $159 million. And then triple Maxi, that's somebody who basically sells out of their house, moves to a cheap place, invests everything they possibly can in Bitcoin, lives tax-free, etc. They can stack 15.9 Bitcoin, which is worth $214 million. This was a great, great little analysis for us to do. But then he spoke about his playbook being a triple Maxi, issuing shares, borrowing, as his example is. And he also had this cool case of, if you are a company, it's very difficult to replicate what Google, what Microsoft, what NVIDIA, what Tesla are doing. But if you copy his playbook, you can do it. This is his returns of MicroStrategy, 1,339% versus NVIDIA. The top performing stock on the planet, they say, excluding MicroStrategy, 956% return. Tesla's number 3, Google's number 4, Microsoft number 5, Apple 6, Meta, Netflix, Amazon. And this is comparing MicroStrategy to the best companies in the world. They called them the Magnificent Seven for a reason. And look at what it did. That's part of the whole Bitcoin strategy. Anyway, what you all want to know is I took his price targets and broke it out in 4-year increments because I thought it'd be good to do that based on market cycles and everything else. And here we are. So, and I liked his case. He took 65K as the base price, even though we're above 68K right now. I could have changed it. I decided not to. I just took his model. And then I calculated, assuming a linear ARR, the price going out. Again, and I did it in a 4-year cycle, so we get to know where we are based on the cycle. Things tend to be very strong in a 4-year cycle. And this is very conservative, but it's also linear. So if you take the bear case, we get to $3 million in 20 years. If we get, and I shared this with Sanjay earlier today, and he said he'd be very happy with the base case in 2028. He would be more than over the moon, but I think will be a lot higher than $180,000 in 2028. That assumes a 29% ARR And assuming the bull case, 37% ARR, 42 million going to $45 million in the year 2045, but just 42 in the year 2044. And that are his price projections. This is why I always stressed since 2017, anybody who knows me and they have one kid, I say buy one Bitcoin per child. 2 kids, 2 Bitcoin. 3 kids, etc. Now you know why. Because of this. And this is sandbagged. Okay. 2032, not even hitting $1 million. Only $900,000. That's how sandbagged this is. Many believe by 2030 will be above $1 million. Let me show you some people who think that. First of all, RFK. He believes he'd buy $619 billion worth of Bitcoin for USA if elected. That's interesting. And per Vivek, if somebody comes in, and per my models as well, if somebody comes in and buys or tries to buy $619 billion of Bitcoin, we're going to $1 million. Again, if somebody comes in and tries to buy that. And check this out. RFK, he has most of his wealth in Bitcoin, which he disclosed last night. I went home. After last year's conference, I went home and put most of my wealth into Bitcoin. I'm fully committed. So he actually got orange pilled only a year ago. That's big. It's been a good year as well. Good time to buy last year. And he's not the only one talking about $1 million Bitcoin. This is Samson Mow. He's an OG in the space. He knows what's happening with nation states. He works with nation states like El Salvador, etc., to get them to, use Bitcoin as a reserve asset. He predicts Bitcoin will reach $1 million within a year. And he said, watch, just watch. He says this with extreme levels of confidence. I almost find both exciting and scary. But anyway, we'll get there eventually. We just don't know when is the question. And this was probably the most important slide. And I kind of did this exercise in a video about 10 days ago. Bitcoin as a reserve asset was the title. And I tried to do calculations if the US equated their amount of gold in Bitcoin, if they followed the China rule, or if they doubled the China amount of gold in their balance sheet today and bought Bitcoin instead, what it would do to the price of Bitcoin. I calculated that. Well, Michael Saylor went one step further. He took this model and took the amount of treasury assets of the US government. If the US government becomes a double Maxi and buys 3.3 million Bitcoin, by 2045, it will be out of debt. It'll have a net surplus. If they go whole hog and buy 5.8 million Bitcoin, which is impossible, they'd have a 30 trillion surplus. But I thought that was a very interesting exercise as well. But I'm not done. There's more. Cathie Wood was on as well. And she talked about how Bitcoin is really leveraging the internet. It's the first monetary system. It's global, decentralized, private, rules-based monetary system. And now, most importantly, it's an asset class that everybody needs to own. That was the big takeaway from there. And we had Senator Tim Scott. He's kind of funny. He will be the new head of the U.S. Banking Committee. And he promises to kick people. And he actually literally said, hit the road, Jack, sang a little song, and kicked Gary Gensler off the stage, if he was on the stage. It was very profound. So it's good to see all these political players come into this show and be there and voice their opinion. And before I wrap, Bitcoin hits a new all-time high. Hola, brasileiros, in the Brazilian real, unfortunately. So that means their currency is going down the toilet, and it's up, Bitcoin's up 31,560% against the real. So don't hold your melting fiat cubes. That's the message here. Hope you enjoyed the show. I have over 50 slides of all the goodness that I found in the show so far, and I'm not even done. I'll be back tomorrow to do it again for day 2 and capture the end of day 1 too. Thank you, TND Tesla. Thank you, Sean Donnelly. Sorry that was a long show. 8,000 people watching. I love you all. 40 minutes. But these are things, literally, if you are trying to orange pill your boss or your friend or anybody else, have them watch this video, especially just the Saylor segment. That's all you need to know. they'll be sold like RFK was when he went to the show a year ago. Thanks all. Have a good night.